order. Should we start out with a roll call or an introduction?
Madam Chair, we have two new members.
Right. Order. Should we start out with a roll call or an introduction?
Madam Chair, if I could suggest that everyone introduce themselves.
Should we start out with? Don't know what's going on, but I didn't say that 3 times.
You don't have another computer on in the background, do you?
Nope.
Interesting. Maybe somebody could mute themselves unless they're speaking. Maybe that'll solve the problem.
It's solved. I shut down the YouTube because I wanted to make sure it was running before I.
Oh, okay. So we know what happened. Very good. Well, Madam Chair, why don't you introduce yourself for the benefit of the new members, and we'll just go down the line.
Okay. Well, thank you. I'm Mary Creek. I'm a dairy farmer from Washington County, Hagerstown, Maryland. Good to have you here.
And Mary, you're our board chair, and you've been on the board a number of years now.
Yeah, several.
Let's go to our vice chair, John Jay.
Hi all, John Jastrzemski, retired professor of forestry at Allegheny College and retired from DNR also. So it's good to be here. I represent forest products industry and loggers and landowners and that sort of thing. I've been on the board for, I want to say 8 years now.
Great. And you're showing your MARBIDCO pride by wearing your logo wear.
Amen.
How about our secretary treasurer?
Mark Krebs, CFO at Farmers and Merchants Bank, and I grew up in a farming family in 4-H, so I have that background too.
Great. I'm just going to call people as I see them. How about Paul Goeringer?
Paul Geringer at the University of Maryland, a faculty member here who does ag law.
Great. Doug Lipton?
Doug Lipton, I'm the senior scientist for economics at NOAA Fisheries, or National Marine Fisheries Service, and I.
Great. Baron Rogers.
Hi, good morning again. Baron Rogers, I'm the coordinator for the Small Farm Program here at the University of Maryland Eastern Shore Extension Program.
Great. Jenny Kim.
Hi, everyone. Associate Dean Ginny Kim, Associate Dean and Associate Director for University of Maryland Extension at College Park.
Great. Deputy Secretary Conley.
Steve Conley, Deputy Secretary, Maryland Department of Agriculture.
Great. Wayne Richard.
Wayne Richard, Regional.
He's the regional manager for Farm Credit. I think you broke up there a little bit, Wayne. Charlotte Davis.
Charlotte Davis, Executive Director of Rural Maryland Council.
Sarah O'Haron. You're on mute.
Sorry, muted. Sarah O'Haron, I am the founder and one of the co-owners of Black Ankle Vineyards, so I'm a farm rep.
Great. Victoria Brown. You're on mute. You're still on mute.
Okay, can you hear me now?
Yes.
Okay, I just finally got on. Victoria Brown, I'm representing the Maryland Watermen's Association, and I'm owner of Shop Cove Aquaculture. We do spat on shell for the state.
Very good. And Don Darnell, our longest serving board member.
Don Darnell, I'm the Executive Director of the Maryland Food Center Authority.
Don was there at the beginning 17 years ago.
When I was 12.
And let's introduce, I think we've got everybody. Let's introduce our two new members. I'm very pleased to have them join us. I'm going to start with Dan Ryder, who's no stranger to some of you. Dan has been a relatively long-time member of the MARBIDCO Loan Review Committee. So Dan, you want to introduce yourself?
Sure. Dan Ryder. I'm a forester. I work for DNR, manage two of our programs, both of which focus on the private sector of forestry. Also, been involved with MARBIDCO for a long time, I think from essentially the beginning. Rural Maryland Council, Rural Maryland Foundation, number of other rural-focused entities and organizations. Thank you.
Well,
looking forward to it.
Glad Secretary Kurtz appointed you to represent the department. And last but not least, Governor Moore has appointed Mr. A.C. Alray to the MARBIDCO board. A.C., you want to introduce yourself?
I'm just messing with you. Hey, good morning, everyone. I'm A.C. Alray. I'm Director of Business Development down here in Crisfield. I am so happy to see people. Oh, did I say that? Is this being recorded? But no, good to be a part of you guys and looking forward to doing whatever I can do to assist. Thank you.
Great. Well, thank you so much for your interest in joining the MARBIDCO operation. All right, Madam Chair, turn it over to you to pick up. We got some staff on the call. Maybe we should introduce them too.
That would be good since they do so much for us.
That's right. Well, I'll start. I'm Steve McHenry, Executive Director. I think everybody knows me. Stacy.
Hi, everyone. I'm Stacy Kobopsik. I'm the Senior Programs Manager with MARBIDCO.
Sierra.
Good morning, everybody. I'm Sierra Christ, Financial Programs Associate at MARBIDCO.
Brian.
Hey, good morning, everyone. I'm Brian Cadden, Financial Program Specialist at MARBIDCO.
Allison.
Everyone, Allison Rowe, Financial Programs Officer and Program Coordinator.
Tina.
Good morning, all. Tina Wilkins, Senior Accounting Coordinator.
And last but not least, Jill, who does so much to help organize these board meetings.
Jill Cabato, Communications Associate.
I think I got everybody.
Stacy?
So with that, I'll turn it back to you, Madam Chair.
Okay. All right. Well, thank you all very much. And we'll get started. The first thing is the approval of the previous board minutes. Does anyone need time to look those over, or are we going to entertain a motion to approve?
Move to approve.
All right. Is there a second?
Second.
Please tell me who you are when you do the motions.
Sure. Mark Krebs approved to move.
And Paul seconded.
All right.
Thank
Any
you.
discussion then? Hearing none, let's go ahead and vote. All those in favor of approving the minutes from the previous meeting, say aye.
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 Thank you. Opposed? All right, that carried. Thank you very much. Next thing, we'll turn this over now to Steve and Tina so that they can start with staffing and financial updates.
Thank you, Madam Chair. Let me start with the staffing situation. And, for the benefit of the new members, let me briefly recap where we've been over the last 3 years or so. Our team here at the office was absolutely overwhelmed during the pandemic. We were provided with $4 million in pandemic adjustment aid, and we closed down. But rather than just going home and sitting idle, I don't think we've ever worked as hard as a group. And it was a stressful time. We did a lot of good work. And by the end of the pandemic period, I think everybody was pretty exhausted, and some people were burned out. We've had 40% turnover in our staffing over the last couple of years. We lost two senior loan officers during that period, one almost 2 years ago, and second one last May. We have 60 years of credit underwriting experience walked out the door with those two retirements. And we had a couple of other staff leave as well. So we've been, up until recently, short-staffed. And at the same time, last year, fiscal 23, was a record year in terms of loan and grant volume. So altogether, we did $14 million worth of transactions last year. So just a testament to the team for their great efforts. And pleased to tell you that a year and a quarter ago, we hired Sierra Christ as a new financial programs associate. Sierra just completed from Credit University's commercial lender course. So congrats to her for that accomplishment. And at the beginning of the summer, we brought on Brittany Rawlings as a financial program specialist, and she's in the Farm Credit University program now. And at the end of the summer, Bryden Cadden joined us from the commercial mortgage industry. So I'm feeling pretty good today that we have a full complement of staff members. Now, obviously, the newer team members probably need the better part of 2 years to become fully adjusted in their roles. But so far, so good. And I'm pleased to say that we have a full complement of team members here in the office right now. So positive news on that front. Let's move on to talk about FY23 in terms of a recap of what transpired. Tina, if you want to launch the FY23 operating budget summary, we can take a quick look at that.
Jill, can you enable sharing, please?
You don't have a share screen function? Oh, there you go. We see you, Jill, but not Tina. Tina, do you see a share screen button?
I see it. I'm just disabled right now.
Oh, you're disabled.
Here we go. Hold on one sec. Coming up. Can you see it now?
Yep.
Okay.
All righty. Well, you can see how we did last year. We brought in all the revenue we were anticipating in FY23, which included $2.3 million for the core programs, $435,000 for the local farm food aggregation grant program, and $2.5 million for the next generation program. So fully funded in that respect. We were carrying over some funds from the prior year. As the members of the board have been on for a while now, we had a tremendous amount of early loan repayments during the pandemic, during the low interest rate environment. Record low interest rates going then and over the last year to, I want to say record high interest rates, but very high interest rates, which has been kind of interesting to see how that's affected our work. But all in, we had $21.5 million in our budget, and we had 18.7 budget, and we ended up with 21.5 million. The operating income number is very significant. We are in the second to last year now of being fully self-sustaining for our core programs activities. And so this operating income number is increasingly relevant to us. The good news is that we exceeded our budget expectation for the operating income, coming in at just under $1.6 million. So the operating income, just for the benefit of the new members, has to cover our administrative or operating costs, as well as any core related grant programs. So not the specialty funded grant programs, but some of the small incentive grants that we fund from quote unquote MARBIDCO's revenue. Tina, if you'll scroll down a little bit. In terms of expenditures, we had budgeted something over 1.4 million and we actually spent 1.3. And then in terms of the programmatic activities by our major categories, the first one there is the core loan and those small grant incentive programs. Excuse me, just the core loan programs in the first category. Just under $9 million in expenditures. The specialty funded grant programs, these are, excuse me, loan programs. These are loan programs funded by other public and even potentially private entities that want to invest in our work. And typically with these specialty loan programs, we're making unsecured loans. With the MARBIDCO core loan programs, we always require collateral security of some amount to be provided when we're providing credit under those programs. But with the specialty programs, we can be more liberal. And very often too, there's a principal forgiveness feature with a specialty loan program. So you can see we did $861,000 in the specialty loans last year. In terms of the specialty grant programs, these are programs for which another agency has granted us those grant funds to then re-grant, or we have special appropriations from the General Assembly for those activities, such as the Wood Products Equity Investment Program, the WIPI grant program for the forest products industry, or the livestock processing grant program to help expand capacity for livestock processing in the state. And then the fourth category there are the core grant programs, which I mentioned. We had budgeted $390,000. We actually only expended $122,000. And this is something we'll talk about in the future. We'll probably be making fewer core grants after this next year as we become fully self-sustaining. And then finally, our two next generation farmland acquisition programs, the original easement option purchase program and the newer small acreage next generation program. We funded $3 million in projects last year. So you can see how we did. We ended up spending all in 15.45 million last year, and we carried over some money. About half of that is in dedicated or special fund accounts, and then we actually ended up with more unbudgeted revenues than we were anticipating at the beginning of the year. So I'm happy to take any questions about that. Ina, if you want to put up the programmatic activity summary, we can look at that briefly.
Is it sharing?
I don't see. Oh, there it is.
Okay.
So this on the program side, you can see how we did. We closed 19 core program loans, approved another 5 that were not funded at the end of the fiscal year. Most of those will have since been funded. And we had 2 loans that we had approved, but were withdrawn for various reasons during the year. On the specialty loan side, we had 34 specialty loans that were closed during the year, 6 that were approved but not funded, for a total of 40. Most of those were in the new Waterman's micro loan program. And we had a few agricultural loans as well that we funded last year. We had some number of applicants in the Waterman's program that were not actually eligible. So the majority of those 8 that you see there were watermen who were not eligible under the law to receive funding for the micro loans. The law essentially requires that the watermen earn a majority of their income from commercial fishing. So many of the applicants who were denied were only earning a minor amount of their income from commercial fishing. In terms of the grant programs, we have several, and we funded 28 and approved another 3 during the year. We have a number of applicants that withdrew for various reasons, for a total of 50 applications altogether. And Tina, keep going. And then with respect to the next generation program activities, both the easement option purchases as well as the SANG program, probably ought to relabel that heading there to be more inclusive. We closed 5 during the year, approved another 4, and 1 applicant withdrew during the year for a total of $3 million. So all in last year, over $14 million in projects that were approved, and we were holding another $4.8 million in approved projects that did not actually receive disbursements during the year. So that's a quick look at last year's activities. Again, it was a record year, and Tina, if you'll put up the 8-year look back, this will give you a sense of how last year compares to prior years, and this helps us to plan for the future too. You can see here in this document our core program loan activity. You can see that it was a near record, not quite, in terms of dollar volume, at just under $9 million. Actually, the year before was a record by a small amount, beating FY 2017. So the average core program loan over the last year, the volume was 6.1 million. So that's pretty close to the number we're working with for projecting out the future, although we do anticipate that this year could be closer to last year potentially, although we're running at about the $6 million level currently for reasons I'll explain in a minute. In terms of the specialty loan programs, you can see that we did 40 specialty loans last year. Majority of those were the Waterman's Microloan program loans. And we've historically done just an average of about 10, but again, this is pre-Waterman Microloan program. So all in on all loans, we did 64 at $9.8 million last year, which is a record number and a record dollar volume. And moving on then to grants, incentive grants, all in number of projects, 55 for 1.25 million. Again, a record number and record dollar volume, not factoring in the pandemic adjustment grants, which was an unusual period for us. Keep going, Tina. And then in terms of the next generation projects, you can see how last year compared to the prior years. We launched the original easement option purchase program in 2018 and the SANG program 2 years ago, the small acreage program. You can see how that compares. So we've done a total of 45 for just over 13 million and leveraged another 16 million in commercial lending capital. So we sum it all up, and you can see there in the next chart that we did a total of 128 financing project activities last year for that $14 million. And you can see how that compares to prior year. Again, a new record. We also want to provide you with information about the other work that we do in the office. We're not just approving new projects, but we have all those loan servicing activities to do. Loans have to be modified. We get subordination requests. We have some workout situations. So we want to give you a sense of the entire workload from a transactional perspective. And you can see there that we had a total of 95 other transaction-related activities last year on top of the new project financing. So that's again another record for us. So it was a tremendously busy year. We were down one staff person for most of the year. So you can see there the grand total of 223 transactions for FY23. So happy to take any questions about that or anything else I've just discussed.
So Steve, we're not, I guess you're going to talk about this more later, but we're not, you say we're not really seeing a slowdown given the higher rates.
Well, we're seeing a slowdown because the Mr. Biff loan program was offline until the end of September. So we literally did not have that program open because, as you may recall, anticipating the retirement of our senior loan officer last spring, we approved a redesign of the Mr. Biff loan program. This is the program, the Maryland Resource-Based Industry Financing Fund program, that's been our workhorse program that we offer in conjunction with commercial lenders. And recognizing that we were having a staffing challenge and looking at what 3 of our sister states were doing relative to working with commercial lenders in those other states in financing projects that are not quite bankable. A typical example, young farmer wants to buy his first farm or her first farm. They don't have enough money for the down payment. Commercial banks always want at least 20% down. How can that essentially missing equity be brought to the table to help that aspiring next generation of young farmers buy their first farm? So we established the Mr. Biff program right at the outset of MARBIDCO 17 years ago, and have been offering it ever since. We have worked with 25 commercial banks and the 3 farm credit associations in Maryland in helping to fund farmland purchase and farm construction projects that the commercial lender could not do without us. And how the Mr. Biff program has worked is the bank is willing to finance a good portion of the project. They would like MARBIDCO to come in to finance, say, 20 to 40% of the project. And we take a subordinate lien on the collateral security being offered for that financing, which allows the lender then move forward with their portion of the financing. Because we are subordinate, that means that if there's a problem and the loan goes and the borrower goes into default, we lose first. So our financing looks like equity from the commercial lender's perspective, even though there's, of course, a debt service associated with that. That's in the underwriting for both our loan and their loan. Because we're in the subordinate lien position, the commercial lender can move forward with the project. And this has been our most popular program. I'm going to take a wild guess that over 60 million of the 100 million in projects that we funded over the last almost 17 years have been Mr. Biff program loans. And I should have pointed this out. We hit a milestone in June. We hit the $100 million financing mark with 1,250 projects total funded over the last almost 17 years. So, Mark, am I answering your question adequately?
Yeah, I was just looking for some color on the project. So yeah, all good.
Yeah, I'm going to talk more about the loan participation program in a minute.
Okay.
All right, any questions? All right, Tina, you can take that down. And I think, Madam Chair, next on the agenda is to look at the FY23 audit. And I'm going to ask Tina to put up the audit report. Everyone received it. And I believe we're on page 5 of the audit report. So you can see here a condensed financial statement as to how we ended FY23 as compared to FY22. You can see there that our cash position remains healthy, but was going down a bit over the prior year. So we're in a good cash position, but I should just tell you, half of that money is spoken for at the end of the year because of unfunded loan commitments or because some of those funds are dedicated in special accounts. So in FY23, we ended the year with $16.8 million in current assets, scrolling down a little bit, Tina, in non-current assets, principally in loans receivable, $32.5 million. You can see our non-current assets for a total of $49.5 million, which is almost $5 million over the prior year. So our net position is improving, which is good because, again, we're going to be self-sustaining in our core programs after fiscal 2025. Scrolling down a little bit more, you can see our current liabilities, which are not terribly great. And we have a small amount of non-current liabilities for total liabilities of $117,000. So looking at our net position, we have on the books today just under $18,000 in undepreciated capital assets. We have some restricted funds at $1.3 million and then unrestricted funds of $48 million for a total net position of $49.4 million. So that's a quick look at condensed financial statement. If we go to the next page, we can see the schedule of revenues and expenses and changes in that position. So in terms of interest income on loans receivable, you can see it was very close to the prior year, and program revenue exceeded the prior year by about $60 million. So we have total operating revenues from an accounting perspective of $1.4 million last year, an increase of $57 million. Again, I think this is a favorable trend. In terms of operating expenses, for accounting reasons, they look at grants as being an operating expense as well as salary and administrative costs in addition to depreciation. So you see our operating expenses came in at just under $2 million last year, which actually is a decrease of $347,000 from the prior year. So you can see the net operating loss. And again, because we have grants in there, we don't think of it as a loss, but for accounting purposes, they include that as a loss. And then a provision for loan losses. Provision, because again, we made so many new loans last year, and we risk rate those loans in our loan administration software. We have to account for projected loan losses based on the composite credit risk of our loan portfolio based on metrics that you all have approved previously. We had to increase the provision for loan losses because of all the new loans that we made by a modest amount. So that's what that's reflecting there. And then in terms of non-operating revenues, again, for accounting purposes, we think of our state appropriations as being revenue, but the accountants don't. And we had a total of $6.7 million in state appropriations last year, which is $1.5 million greater than the year before. So that $1.5 million is the three new programs that were funded last year. The $500,000 for the Waterman's Micro Loan Program, the $500,000 for the Forest Products Industry Equity Investment Program, the WIPI program, and then another $500,000 for the Livestock Processing Equipment Grant Program. So that reflects the difference there. We had no other special federal or regional grants that were received last year. With the original Next Gen program, that's an easement option purchase program. So in that program, we're hoping that many of those option purchases will get paid out by a permanent easement being purchased by a permanent easement holding agency like the Maryland Ag Land Preservation Foundation, MALP, or the DNR Rural Legacy Program, or a county land preservation program. So we did have about $1.6 million in option repayments last year, which is greater than the prior year by $368,000. But we made $2.4 million in option purchases last year, as well as $140,000 in SANG easement purchases. So with the SANG program, we actually purchased a permanent conservation easement at settlement. With the option purchase program, we're temporarily purchasing an easement, leading to a permanent extinguishment of the development rights on those farm properties. We had a small amount of interest earnings on investments and a minor amount of other revenue that came in. So you can see there again that our net position increased by, it increased by $4.8 million, which was an increase over the prior year by $670,000. So that's kind of a big picture look at FY23.
So Steve,
go ahead, Mark.
If you strip out the items that typically wouldn't see in an income statement, where are we at the bottom there? If you take out the state appropriations and the grants.
I jumped ahead. I'm not looking at. I really should look at the budget because that would be a place that's easier for me to pick it up. Tina, you want to weigh in?
Yeah, put the budget back up.
So
like our operating, this blue number right here, the 1.5, we don't consider the appropriations or in that particular figure.
So Mark, if you were to look at interest income from loans, 1.2 million, and it'll be that number would be should be close to what you see in the audit report. Program income is at 180,000. And miscellaneous other income, it all adds up to 1.579 million. And this is a really important number, Mark, and I know this is why you're asking. This is the key number for us. Outside of appropriations, what do we have to work with to fund our operating expenses?
Right.
Thanks. That's your question?
Yes, sir. Thank you.
All righty. Let's move to page 19 because I did want to just.
Steve, if I could just have a follow-up question to that.
Yeah.
In 2025, we're totally self-sufficient with the loan offerings that we have.
With our core loans and grants, after next year, we have $2.3 million we think we're getting next year. After that, we believe we're going to be self-sustaining. And I'm going to talk about that in a little more detail in a moment.
Oh, okay. Never mind. I'll wait then. Thanks.
Sure. I just wanted to note the loans receivable for you so you had a clearer picture of what we have outstanding in terms of loans receivable. You can see there we have little over $34 million as of June 30th in booked Mr. Biff loans. And then we have a number of other core and specialty loan programs with much smaller loan balances outstanding. So I just wanted you to see that. So total of 36.6 outstanding with an allowance for loan losses of 1.3 million. And as I was explaining earlier, we include that allowance for loan loss in our financial statements because we don't want to overstate the equity position on in our financial statement. So just FYI. All right. So any other questions about the audit? Now, we do, under our procedures, need to appoint an audit committee to meet with the independent auditors. And I would like to ask for volunteers. Mark, our resident CPA, I'd like to ask you if you'd be willing to serve again as our Secretary Treasurer and CPA on the board. If you'd be willing to do that, we'd appreciate it. Tina, you can take that down.
I'll be happy to serve again, Steve.
Oh, great. And Mark, are you good to serve again?
Yeah, I'm sorry. I was putting my thumbs up, but I guess.
I didn't see.
So yes. Yeah.
Sorry.
I'm good.
So Mark and John, anybody else wish to serve? It's not a particularly heavy duty. We have a clean audit every year and our statements are quite straightforward. So. All right. Well, we'll run again with Mark and John.
And this is done by Zoom, Steve?
Yeah, this will be a Zoom meeting.
Okay,
Steve,
I can do it.
How many people do you need to have on that committee?
At least 3.
Okay.
I can do it.
Right.
I mean, just so you know, it's about a 10-minute call top. So, unless you ask a lot of questions.
All right. Well, we have 3 volunteers. We'll let the record know who they are. And let's do, if you don't mind, Madam Chair, a motion and a second for the appointment.
For the appointment for the committee, is that what you're asking for?
Mm-hmm.
Okay. Is there a motion to accept the volunteers for the audit committee?
I'll make the motion.
Thank you.
Is
there a second?
This is Sarah. I'll second. Sarah
Thank
O'Haron.
you. Okay. Any further discussion? Any further volunteers? Hearing none, we'll go to a vote. All those in favor, aye.
Aye.
Opposed? Motion carries.
Very good. Well, let's move on now then to FY24 and give you a sense as to where we are. And Tina, if you'll put up the summary budget. All righty. So you can see where we are. We are 33% of the way through the year. So that's a metric that might be helpful to you. This is as of October 31. We received our appropriations 50% at the beginning of the fiscal year and 50% in January. So you can see that we were appropriated $8.3 million this year, and we've received half of that thus far. In the core programs category. In the next gen program category, you all may recall that originally, as required by legislation that passed a couple years ago, we were to have the next gen program forward funded by 4 fiscal years with a $10 million appropriation. Because of the rapid rate of loan requests coming in for the core loan programs last year, particularly the Mr. Biff program. We asked the General Assembly if we could take 6 million of that 10 million and apply it to the core program, which the General Assembly approved. So you can see in the budget, there's 8.3. It originally would have been 2.3. And that's the amount that we expect to be there in our final year, which is FY25. 2.3 million for the core program. So we have an extra 6 million to fund the large demand from last year. And we think we're going to do at least 6 million and much more likely closer to 8 million by the end of fiscal 24 is our best thinking right now. And we actually have almost $10 million budgeted for the core, actually $11 million if you look at it all together, then including the core programs other than the Mr. Biff program. So we have half of our state appropriations have been collected. We're carrying over. We had budgeted 1.5 million. We're already double that. So some of that is early loan repayments. It's hard for us to budget early loan repayments because we don't know how it's going to go. But so we don't want to overestimate what we can't predict the future to be. But and then we've also had some loans that were approved that decide not to move forward. So that's what's reflected in that first number there. Loan repayments, our principal repayments are running ahead of budget, which is good. And interest income from loans is running right on budget. So 33% is right where we should be. And again, that's part of that operating income that we were talking about earlier. So in terms of the operating line, we are at 45% of the budgeted number, which in this case is $764,000. So that's the income so far this fiscal year. Going down to do the expenditures. Seeing if we can scroll on a little bit. We are at $512,000, which is 32% of our planned spending for the year. I should note that we have an extra month of rent included in that number. Tina, can you explain what's going on with our bank?
Oh yeah, so they had us re-sign the ACH paperwork, and we used to pay the rent on the 1st of the month, so now we pay it like on the 30th for the next month. So at the end of the year, it'll reconcile itself.
So we're carrying an extra month of rent that will be reconciled at the end of the year. So we won't pay 13 payments of rent in the annual statement, but right now we're running a month ahead. In terms of the expenditures, all in on the core programs, we budgeted 11. We're at 1.5 actually expended or approved. We've got another $1 million plus in outstanding Mr. Biff loan requests. But as I mentioned a minute ago, we've lost almost a quarter of the year with the Mr. Biff program having been shut down. And this is maybe let me defer the discussion of the new loan participation program for a minute, but you can see there that we probably would have expected to be double that number at this point, based on where we think we're going to be with the Mr. Biff program going forward. And the other programs have had some activity. Tina, this is probably a good time to put up the programmatic activity document.
Which one?
The programmatic activity for FY24.
Let me see. I don't think I have that up. Let me grab it.
We'll tell you what, we're going to have a report on that from coming up under the project. Well, here we go. So you can see there, we've got on this is as of end of October. So there's some new activity since then. But you can see there we've got $1.8 million in requests. We just had another one come in. So for the core programs, in terms of specialty programs, again, the Waterman's Microloan Program is the activity there. We've had one Southern Maryland loan as well for $20,000. No activity in the other specialty loan programs thus far this year. Specialty grant programs, we're going to have a report on that in a moment. And then in terms of the core grant programs, the big ones we have out currently are the farmer cold storage equipment grants and the local government ag cost share grants. So we're going to have a report on that in just a moment, but you can see there how that is running. 26 applications totaling $48,000. And then we do have some next generation activity, which we're going to talk about in a minute. So not a terribly busy looking fall on paper, but again, we've have been quite busy because we've got 2 new staff members who are finding their way along as they engage in their new work assignment. Let's move along, Tina. All righty. Unless there are any questions about where we are year to date on the budget, and we'll have a little bit more discussion about some of our programs in a moment. Let's look at the loan loss reserve and average loan interest rate. So some good news here. Our loan loss reserve as of today is at 2.58%. It's been slightly higher in the recent past. So we're heading in the right direction. Our actual loan losses are less than 2%. So, you know, we're maybe slightly conservative in how we're analyzing the risk in the portfolio, but a very good number. Just for the benefit of the new members, a well-managed small business revolving loan fund should typically expect to have loan losses of 5 to 7%. So we're doing pretty well in that category. And then the other metric that you all are interested in tracking over time is the average interest rate that our entire loan portfolio is paying out today. You all have set a target of a portfolio-wide interest rate of 4%. And today we are at 3.68%. This number is higher slightly than what you've seen in the recent past. Prior to the pandemic, this number was at 4.25%. And you may remember during the pandemic, with the record low interest rate environment, we actually provided relief to all of our collateralized loan borrowers, about 136 of them, if I recall correctly. We actually lowered their interest rates. So we went from 4.25 down to under 3.5, and now we're inching back up with the new loans that are being booked and the Mr. Biff loans that are adjusting that have already been booked. So happy to take a question or two about that.
Steve, I've got a question about the loan loss. How is that trending? Is it fairly stable year to year, or have we seen it increase over time, decrease?
It's a small decrease. That's what I was saying. The trend is in the right direction. Now this, you know, we have this discussion about once a year. Are we taking enough credit risk in the loans that we're making? And, you know, previously, I think we concluded that we are. And Dan, you're a member of the loan committee, so you have intimate knowledge of the core loans that we're making. The only thing that I could conceive of that we would do differently is today, we will not approve a loan where the anticipated collateral being offered exceeds a combined 100% loan to value. So remember, a traditional bank will not want to make a loan greater than 80% loan to value unless there's a loan guarantee associated with it. And we're lending in the equity space with our core loans. I mean, could we go to 105%? And would we suffer greatly? I don't know. Steve Conley, you're a member of the loan committee. And Dan, do you guys, I mean, is that why you're asking, Dan? Should we be taking more credit risk?
Yeah, I'm being honest, I'm putting a bunch of puzzle pieces together. And ultimately where my mind is I'm really curious about the future status of the program and our ability to do what we do when we're 100% independently, self-financed.
Right. Well, let me ask our resident commercial lender, farm lender on the call, Wayne. If we were to go to say 105% loan to value, would you be bringing forward project requests that you're not bringing forward today?
I would say overall, not that much difference. You know, you get up to 105. We want people to at least be able to cover closing costs, and that's really what you're starting to talk about is closing costs involved in on that. And if someone can't bring at least that to the picture, I don't know if we might be hesitant to even bring some of that stuff to you guys. So I don't think that would make a major difference one way or the other. I think the 100% is a good place to be. I think overall we're in a pretty good spot.
Okay. So any other comments on that or questions? All righty, moving on then. We have an update on loans paid in full and early loan repayments. Dina, I don't know if you have that ready to go or not, but I will tell you, as I mentioned earlier, in FY22, which was during the pandemic period with very low interest rates, we had borrowers that were able to refinance at lower rates who did. And we had 25 loans that paid off earlier than anticipated. If you get down to the bottom of that chart, Tina, you can see there we had 25 loans pay off early, totaling almost $3.9 million. So, and the year before, same thing, same reason, 17 paid off early, 2.8 million. So if you look at in the mid-teens, we were doing 500,000 to 800,000 a year in early loan payoffs, maybe up to $1 million, and then we're doing double and triple that in 21 and 22. So, and that again was a function of the very low interest rate environment. Now interest rates are quite high, so we had early loan payoffs last year of $1.8 million, but just 8 of them. And I don't recall, there might have been a special circumstance with 1 or 2 of them that they needed to pay off early for different reasons. And then this year so far, 630,000. I guess if you extrapolate that forward, it'll look like last year. But again, we don't know we can't predict the future on this. We can't know what's going to pay off early. There's just no way to know. So, if you go up a little bit, Tina, show the folks, what is, just in terms of loans that have paid off, you can see there. the list. I'm pleased to tell you that the shellfish aquaculture program, and again, these are unsecured loans that we're making. We have made all in, including, well, not including remote setting. I think we've made 85, and 58 have completely paid off. That's a tremendously positive statistic in my book. And then we've made 5 remote setting shellfish aquaculture loans, and 3 have paid off in full. Again, unsecured loans paying off in full. We've only had 1 borrower who had 3 loans that defaulted, declared bankruptcy, and we actually recovered half of our loss from the bankruptcy court. So we've done really tremendously well with that program. That model seems to work well. The model of, with an unsecured loan, providing an incentive for the borrower to make payments by providing a grant at the end of the term of the loan, essentially. That's what we're doing with the Waterman's microloans and the Southern Maryland revolving loans for agriculture. We typically provide a 4-year term loan. First, make the payments for the first 3 years. You get the last year forgiven. There's a psychology associated with that seems to be very positive and constructive relative to the good performance of these unsecured loans. All right, any questions about that? We can move on then. And Madam Chair, I'd like to just take a look at the future a little bit, at least FY24 session. Tina, you can close out of that. Just want to give you a sense as to the fiscal environment we're in right now. The General Assembly's Spending Affordability Committee met recently, and in prior years, prior recent years, the state is, because of the federal funding and pandemic relief support, pretty solid fiscal situation the last couple of years for the state government. This year, looking at anticipated revenues versus anticipated spending needs, we're starting to be back where we were previously, in the sense that there's more demand than there is projected revenues. And so for FY25, well, FY24 will finish with a surplus, but FY25 will be a little over $300 million short. And over the next following 2 fiscal years, it'll be closer to 400 million short, again, with current services funded. And then beginning after FY27, starting in 28, given the state's commitments to public education through what's called the blueprint for public education, there's quite a drop off there. So the state has about a $27 billion general fund. And starting in FY28, they could be $2 billion short, which is significant. So the state does have a very healthy rainy day fund today, double what is needed for the bond rating houses. So in the short term, I think the state will be able to manage, with some trimming, well, but there is this longer term concern. So we're back to fiscal austerity of at least a modest nature for FY25. And then, but they're looking ahead to what's called the fiscal cliff in fiscal 28, with a large projected deficit unless, there's changes in spending or revenue increases. Dan, you have your hand up.
That's a mistake. Sorry.
Okay. So, in terms of MARBIDCO, the Department of Budget and Management has projected our current services budget at $4.235 million for next year. So that's going to fund the core programs for one final year at 2.3 million. We have one final year of the local farm food aggregation grant program at $435,000. And then we have continuing for the next year, the livestock processing grant program, which can also fund blue catfish processing activity, which is an important issue right now. The WIPI program, the Forest Product Industry Equity Investment Fund, at $500,000, and the Waterman's Microloan Program at $500,000. So $1.5 million of specialty loan or grant programs that are that we're currently offering, as well as the final year of the core programs funding and the final year of the aggregation grant program funding. So that is our sort of baseline budget. Doesn't mean that, you know, as the Department of Budget and Management and the governor put the pieces together, that they could recommend something different, but that's what we anticipate for next year at this point. The governor will introduce his budget in the second week of the legislative session in January. Then we will go through the appropriations process in early to mid-February. So that's my looking at the crystal ball and where I think we are. I'm hopeful that we will be able to be funded at the 4.235 million in fiscal 25. The one thing I should point out that's new again this year, which the legislature actually used last year to make adjustments in what the governor had proposed, because of the constitutional amendment that passed a couple of years ago, the General Assembly can actually move money around. So this is the second year they'll be able to do that. And so in prior years, the General Assembly could only cut individual line items in the governor's budget, but now the legislature can move money around. So, you know, some folks might be a little more theoretically concerned about, you know, the wishes of individual appropriators and other legislators shifting funds around, but that's where we are. Charlotte, you have a question.
Yeah, I just wanted to know, some of the newer programs have been legislatively created. They're not necessarily things you have, proposed. So do you anticipate any additional new programming like that coming from legislators?
I have had no discussions with legislators about new programs. We didn't talk about this earlier, but part of that appropriation that's in the current budget includes $1 million for the Oyster Shucking House Loan Program. It was a one-time appropriation to help expand or renovate oyster shucking houses with a goal of getting more oyster shells returned to the Chesapeake Bay. And we've had no request yet in that program, by the way. I'm not anticipating any new programs. You may recall last year, the Chesapeake Bay Foundation wanted us to set up a new financing program for minority oyster farmers. That legislation did not pass. And frankly, the fiscal net was kind of large, and I think the folks who follow the budget closely in the General Assembly were worried about the future. I mean, I think they could see what was coming in the out years relative to the need to fund public education and the projected revenue shortfall to meet the current requirements of the Blueprint for Public Education, otherwise known as the Kerwin Commission plan. Did I answer your question, Charlotte? Okay, so that's where we are for looking at the budget for next year. So unless there are any questions, let's move in now to updates on core loan program. So we've had some discussion of this already. We've had 5 Mr. Biff loan applications come in. 4 of them have been approved, including the 3 you saw previously on the report. I did want to talk about the loan participation program, and this has been a conversation of much discussion during 3 previous meetings of the board. The model that we're working on, and I think we had a breakthrough last week, and we met with our attorney yesterday to talk about the particulars of a master participation agreement with farm credit associations, including Horizon Farm Credit, which is the largest farm credit association serving Maryland. We think we now know how this can work. And let me tell you what's different in what we're doing in Maryland than in the 3 other states that currently have loan participation programs offered by their state agricultural finance authority. In those other 3 states, Kentucky, Iowa, and Minnesota, they're typically partnering with commercial lenders with participations where the loan to value on the financing is either less than 80% or there's an FSA loan guarantee involved. And what we're doing here with our current Mr. Biff program, the direct loan program, and the proposed new model is to actually continue to offer financing going right up to potentially that 100% combined loan to value. And Horizon Farm Credit asked its funding bank, which is Ag First Farm Credit Bank, headquartered in Columbia, South Carolina, which is the funding bank for all the farm credit associations in the South up through the Mid-Atlantic, including Pennsylvania. They asked their legal counsel what could be done using a 2-loan note model. We had worked with Wayne and his colleagues at Horizon Farm Credit to devise a 2-loan note model, which we thought would work well, meaning Farm Credit would use at least 1 loan note for funds it was advancing for a project that we were involved with. And there would be a separate second note for 100% of the MARBIDCO financing. So this would help them administratively track the loans that they're now going to be servicing for us. With a direct loan program, we service our own loans in this office, and if there's a foreclosure, we deal with it directly. Under the loan participation model, the bank is doing both the loan closing and all of the loan servicing basically on our behalf. And that's going to save us a tremendous amount of time and energy, not immediately because we have hundreds of loans booked, but over time with the Mr. Biff loans, our workload will go down. And so we had, you all had approved the new program. We have the model we want to use. We have application form. We had ended up last summer with what we're calling a first lien, last out approach, where we would share first lien, and if there's a problem, we'd be contractually subordinate in a liquidation. So Horizon asked Ag First attorneys whether they could use this 2-loan note model with a longer term financing associated with a second note. Well, there are special federal rules related to how farm credit associations make both short-term loans, which are loans of 10 years or less in maturity, and longer-term mortgage kinds of loans, maturities over 10 years. And there's a hard and fast rule with farm credit associations making longer-term loans that those loans cannot have a loan to value greater than 85%, unless there's a loan guarantee offered, like typically Farm Service Agency, in which case the loan to value, if with a guaranteed loan, could go to 97%. Well, we're not expecting to do very many guaranteed loans on these farm credit related Mr. Biff transactions. So Ag First actually hired outside legal counsel to study this issue. And they concluded on the longer term kinds of financings that 100% participation in the second note, again, the MARBIDCO portion of a financing, would not pass the muster with the federal government, to the federal regulator. So we just didn't know what to do, because we all had agreed that for administrative reasons, it would be a lot easier for farm credit associations to put a second note, have a second loan in their system versus trying to combine everything into a single loan. So the revelation came about last week, and I was actually at Paul's annual Ag Law conference. I ran into Horizon's legal counsel, and we were chatting about ways to get around this long-term loan 100% issue. And he said, there's been a recent change in how we refinance short-term notes. And we can refinance a short-term note for up to 10 additional years. So you could have a 10-year note that could be refinanced for up to another 10 years. Well, sort of light bulbs went off. Said, well, what if we had a loan that was originated with a 10-year maturity, but that could automatically refinance to a 15-year maturity, which was the planned amortization with the new Mr. Biff loan program. We had planned to have a 15-year term loan, and if it was amortization was longer than that, then we would be repaid by the bank sort of automatically at that point with the balloon feature as part of the regular way we were going to do things with the loan participation program. So apparently, it's my understanding from the Horizon side that they think conceptually that should work fine. We've been provided a master participation agreement that's a standard agreement of 25 pages that's used by farm credit associations amongst themselves. We met with our attorney yesterday, Stacy, Brian, and I. Our attorney is preparing comments for Horizon's attorney, and we feel like there's a decent possibility that early in the new year we could actually have a functioning loan participation program. Because of how farm credit files its notes, I mentioned the first lien, last out model. We have always considered farm credit loans, except those that are especially noted for very short-term financing, as being senior to us in the Mr. Biff program. Technically, the like a mortgage type lien and financing with that related note would be ahead of us. The shorter term note would be behind that long-term loan. So we technically we wouldn't be in a shared first lien position, but it's a very technical thing. The reality is we would be basically sharing a first lien with the farm credit associations in the model that's being discussed. So the plan right now is to work with Horizon, get this model in place. Colonial Farm Credit is anxious to move forward with the new loan participation model. They're also anxious to have this new model deployed because I've been approached by the Commissioner of Agriculture of Virginia. They want to set up a MARBIDCO type program in Virginia. And you've heard me describe in the past, Delaware is looking at the same model for a new ag finance entity in Delaware. So this model, once it works and is launched, will become potentially a model for other states, including Virginia and Delaware. So I know that's a lot of information to absorb, but I'm happy to take questions. I feel finally like we had a breakthrough in the past several days, and we're on a track now to a resolution. It will not happen before the new year, though, I do not believe. Questions about what I just said? I know it's a little complicated. All right. We've done one agribusiness equipment working capital loan so far this year and no forestry or vineyard loans. So unless there are questions about any of the core loan programs, let me jump over now to the grant programs. I think, Stacy, you're prepared to make some remarks?
Sure, I can update on the activity of the grants for this fiscal year. So the Wood Products Industry Equity Incentive Grant, so far we've received 3 applications. 2 are pending for about 87,500, and 1 was denied. For the Livestock Processing Equipment Grant, we have 5 applications that are, 1 was withdrawn and 4 are pending. Let's see. For the cold storage grants, this has been a popular program. We've received 35 applications. The deadline was November, I want to say 17th, so it's closed. We approved 22 for 38,125. 2 were denied, and we have 11 that are pending. Let's see, and we've had 3 local government cost share grants. Yeah, all 3 were approved for 14,108, and I think I covered all of them. Did I miss any?
Any questions about any of the grant programs?
Stacy, I couldn't quite hear your report on the forestry.
Sorry, can you hear me better now?
Yeah.
Okay, so with the Wood Products Industry Equity Incentive Grant, we've only gotten 3 applications. 2 are pending and 1 was denied.
And what was the total dollar amount for those?
So for the 2 pending, it's 87,500.
Okay.
I should tell you, Dan, we actually had an applicant who bought some substantial equipment prior to the cutoff. The earliest date that equipment could be purchased using our grant funds. And it was a week before. And there was nothing we could do about it. We have the earliest, for our grant programs, we have the earliest deadlines of any public agency I know. So unlike most government agencies who are trying to incentivize certain activity, they generally do not allow the equipment to be purchased until after the project has been approved by them, which could be months down the road. It's our practice to actually have a purchase date that's contemporaneous with the date we're announcing the program, because we know people need equipment sooner rather than later. So we let them sort of go back to when we announced the program, because they're hoping that they're going to get, some matching funding from what we're announcing. But we just can't go backwards in time and fund stuff that's already been purchased. It just, it just doesn't make sense.
I get it.
From an incentive perspective.
So you've received 3, 1 you had to reject. So you have 2 active or pending. Any intel on future? Like, are we expecting a flood of applications, I hope, on December 14th?
Brian, do you have any sense as to the number of questions you've had and how that might translate into applications?
Hey, Dan. Yeah, we've gotten several inquiries from people who are interested in applying. And a lot of the time I've just given them information, given them the application. And so far, and maybe they're still working on the applications or they haven't submitted them. I know of one guy who said he was going to apply this week and he hasn't yet. So hopefully we get some more.
Okay. Yeah. I'm just trying to think what I can do to I'd like to see this program oversubscribed. You know, I'd like to see all of our programs oversubscribed. This is one program that.
And I should tell you too, and thanks to the DNR Forest Service, they're actually providing 100,000 in additional funding to incentivize what would be thought of as value-added processing activity. So there's a great need for new markets. We lost the Luke paper mill almost 3 years ago. Had a huge impact on the pulpwood market in Maryland. Greatly affects our landowners and the stewardship of the forest land in the state. And you know, there's we've got a lot of standing timber, and so we need to find new markets and help our existing sawmills and other facilities modernize and access those new markets. Okay, any other questions about grants? Alrighty. In terms of loans, I mentioned the Waterman's micro loan. We've had 13 applications this year. 5 have been approved for 75,000. Had a couple withdrawals, 4 with denials. Again, people who are part-time watermen, not earning a majority of their income from commercial fishing, are not eligible under the statute. This is one of the rare programs where the legislature has given us the parameters of how the program should operate. So no shellfish aquaculture loans to date so far this year. We launched, as I mentioned a few minutes ago, the new oyster shucking house loan program. This is a second program where the General Assembly has given us specific parameters around how the program should operate. And this one has a requirement that we can only lend $25,000 for each new job that is created or retained, and I should say full-time job that's created or retained. So that may be an impediment for some potential applicants. I know Stacy's had some conversations with folks, and so what we've done when we launched the program in September, we anticipated that we might need to pair up funding from this program with our agribusiness equipment and working capital loan fund program as well, where we have more flexibility to provide supplemental financing for a project related to a renovation or construction of a new oyster processing facility. The advantage of the new oyster shucking house loan program is the borrower actually can be credited by DNR for every bushel of oyster shell returned to them. And so we have worked with the oyster division at the DNR Fisheries Service to set up how that's going to be handled when we get to the point of having folks wanting to be credited for bushels of oyster shells that they're returning to the state. So, but we have no application yet in that program. You all, I think, are aware of the big USDA grant. We were awarded $3.8 million for livestock processing facilities, USDA inspected facilities, I should add. And we're matching that with $1.3 million. Loans of between $250,000 and $2.5 million can be made. And we're taking some of that livestock processing grant money and using that as an additional incentive to provide a 10% equity incentive grant of up to $250,000 for the $2.5 million loan. So we'll match 10% with additional funding to try to incentivize that. We've had some calls about it. Oh, and by the way, blue catfish, very much eligible in this category, and we have had some calls from folks who are interested in this. So Steve, you have your light on. I think you about ready to ask me a question. Nope. So we're waiting for applications. Any supplemental information from my team on livestock grants or loans that they would like to offer? All righty. And then the final thing I just very briefly wanted to talk about, and Steve might actually have a supplemental comment. This deals with the local farm food aggregation grant program. We have put that program on pause because MDA was awarded a sizable $3.8 million grant. And we're wanting this program to potentially supplement and augment what the MDA program is going to offer. Now, I know MDA has been waiting for final approval on its program design from USDA. Steve, is there anything you want to add on that? I know the committee is probably interested in knowing when we're going to launch the aggregation program.
Yeah, we're still negotiating with USDA, but pretty close to finalizing that agreement. As you said, it's $3.8 million. It's part of it's called the Resilient Food Systems Infrastructure Program from Ag Marketing Service, who is ARP money. And it's going to be focused on things such as aggregation and value-added products outside of meat and poultry processing. So it's a 50% match unless you're fall in that category of a small business enterprise, such as a veteran-owned or minority-owned business, and then it's a 25% match.
So what our plan is, once we know what USDA is going to let MDA offer, is to look at our program and make sure it's complementary and provides additional incentive for the aggregation activity. So once we know what MDA is doing, we're going to put together the final draft for our committee to review. And then our plan is to announce it very shortly thereafter. So I think that covers all the loan and grant programs. Let's go over, unless there are questions, to the Next Generation program. And our colleague Allison Rowe is the leader on that.
Yes. So with the Next Gen program, I provide like a statistic document. So far for fiscal 2024, we have processed 2 applications, and we're hoping to have a vote later in the meeting to vote on those for approval. Right now, we have a total of 40 projects that are, with 36 of them closed and then 4 of them pending for settlement. To date, we have preserved almost 4,000 acres. So it's 3,908 acres. And then we showed through the statistics of the counties that we're serving projects in and the acreage that we're preserving in those counties. And then on the SANG program, we have not processed an application. We do have one in the hopper, so that will be coming forward hopefully in the next couple of weeks. And we've closed 4 projects, preserving a little over 100 acres.
Questions for Allison? All righty. All right, let's move. Unless there's any programmatic questions, we can move on in the agenda, Madam Chair, to the project review committees. And you all have received the rosters for our 4 committees that are currently active. These include our hardworking loan review committee, which Dan Ryder and Steve Conley serve on. We have 2 other longstanding members who are former members of this board who also serve on that committee, Joe Chisholm and Pam Saul. I'd like very much to add one or perhaps two more members in the near future to that committee. If you all have any suggestions, please let me know. This is a seriously hardworking committee because all of the core loans go to this committee for review and approval. And if they're over $300,000, they come to you for subsequent approval. And any grants that are not assigned to another committee, this committee also reviews. So hardworking committee. It has a standing Thursday morning meeting if the meeting is needed, although electronic approvals are pretty much the norm today unless there's some issue of controversy. So you have that roster. We have also the local small farm aggregation grants committee that has been consisting of board members Don Darnell, Paul Goinger, and Sarah O'Haran. Karen Fedor, who's a program administrator at MBA Marketing, has also been a wonderful addition to this committee. And we've actually had a volunteer for a new member for this committee from the board. AC Oury would like to join this committee if you all are willing to let that happen. And as I mentioned, this committee will be meeting once we have word from MBA on the program that Steve discussed. We have our Shellfish Agriculture Review Committee, which consists of Shannon Dill, who's a senior agent with the University of Maryland Extension on the Eastern Shore, Dr. Matt Parker, who's the agricultural business specialist at the University of Maryland, and Becky Thur, who is one of the senior people at DNR who oversees the shellfish leasing and permitting program. This has been a very good committee, and we expect that they would want to continue in service. So that leaves me with the Next Generation Committee, which we've had some recent additions to as of what I sent you yesterday. You now have a new lineup for that committee that consists of Michelle Cable, who is the MALP program executive director. Our colleague Stacy Kobasic is a member replacing Betsy McKeon, who retired last spring. Tom McCarthy is now in the private sector, but he worked for DNR Rural Legacy Program for several years. Retired Assistant Secretary at MBA, Pat McMillan. Retired Farm Credit Loan Officer, Bruce Yerkes. He's very active in a lot of things up in Cecil County. And finally, a new member as of this week who we'd like to recommend, Jen Perkins, who previously ran the Virginia Department of Agriculture's Farmland Preservation Program, and she now works for the American Farmland Trust. So we think she's going to be a wonderful addition to this committee. So happy to take any questions about committee organization. Would like to have a motion to approve all the committees and the members thereon, just so we have that on the record. But I also would like you to reaffirm a decision that you have made previously for the Loan Review Committee. We have, the Next Gen Committee has 6 members. So you have approved a policy in the past for the Loan Review Committee when we had 6 members on that committee that a project could move forward with approval with 3 affirmative votes as long as there's no dissenting vote. So rather than requiring 4 out of 6, 3 works unless there's a dissent, and then you need 4. So I would like to sort of institutionalize that policy when we have committees of 6 members so that we can function in an efficient way when we have members who, who are absent or out of town or whatever, we can move forward because, folks are waiting for us to give them the decision on the project approval. So questions on that? And Madam Chair, if there's no questions, perhaps we can get a motion to approve the members of the 4 committees as recommended, and then the policy on if we have 6 members 3 affirmative votes unless there's a negative vote, in which case a majority of 4 would be required.
Okay, do we hear a motion for that?
I'll
Do we
move that we
understand?
accept the 4 committee members as recommended by Steve, as well as the policy. 3 members if no disagreement, and then 4 members required for positive affirmation.
Second.
Thank you. Good
I'll
summary.
second it, Sarah.
All right, it's been moved and seconded that we approve the committee appointees as well as the new policy. Is there any discussion? Anyone need further understanding on what the motion is? Okay, I'm assuming everyone understands, so we'll go to a vote. All those in favor say aye.
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 Opposed? Motion carried.
Thank you very much. And now moving on to the next item, Madam Chair, the project acceptance report. This is the report that we put into the record of all the projects that have been approved by the various committees since your last meeting. So you have received a 3-page document, a chart labeled MARBIDCO loan grants and easement option purchases approved by the MARBIDCO board review committees since July 1 to November 15th, 2023. So you need to approve that report.
Okay. Is there a motion to approve the report that's formally accepting the grants, loans, and next gen program requests that we've received since the last board meeting?
This is Mark, move to approve.
This is Paul, I second.
Thank you very much. Is there any further discussion? All those in favor, aye.
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 Opposed? Motion carries.
Okay. The next item on the agenda is the appointment of a nominating committee. And for the benefit of new members, every January or February, the board holds its annual meeting where it elects the officers for the coming calendar year, basically. You know, for the 12-month period until the next annual meeting. Our current officers are Mary Shank Creek as chair, vice chair John Jastrzemski, and our secretary treasurer is Mark Krebs. They have served at least 2, maybe 3 terms in this role. I'm kind of sorry to say that John has indicated that he's going to be retiring if we can find a replacement for him at the end of his current term in June. So so we may need to replace John as vice chair. And I have not talked to Mark or Mary as to whether they want to continue. But anyway, we need, under the bylaws, a committee to be formed to surface candidates and make a recommendation to this board at the annual meeting. So it's been the board's previous policy that it would make sense for at least the chair and vice chair to come from among the gubernatorial appointees on the board. And of course, all 3 today fall into that category. All 3 officers are gubernatorial appointees. I will tell you that the officers have no duties other than to serve as the leaders of these meetings in appropriate succession. So if the chair is not present, the vice chair would chair the meeting, and if the vice chair and chair aren't present, then the secretary treasurer would chair the meeting. We have not functioned with an executive committee in the past. So there's been no other responsibilities that the board has delegated to the officers other than what I have just specified. So happy to take any questions, but I think we need to if there aren't any questions, then appoint a nominating committee. I think we have a couple of members that have volunteered. Are there any questions about the process? Okay. Charlotte Davis, I believe you're willing to serve again. AC Alray has volunteered to serve on the committee. Might be good to have a third person, but it's not required. So, Charlotte, since you're the experienced member, perhaps we'll designate you as the chair, and folks can indicate their interest in serving as an officer in the coming year to her. And the committee will meet and act accordingly. And we certainly want to thank our existing officers for everything they've done. You all have been marvelous. And I don't know if there's going to, I don't know what the committee's going to do, but so with that, Madam Chair, I guess we want to have a motion and a second to appoint the nominating committee.
Okay, is there a motion for the committee and nominations?
I motion to approve the nomination committee.
Thank you. Second?
This is Dan. I'll second.
Thank you, Dan. All those in favor, aye.
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 Opposed? Motion carries. So we have a nominating committee. Thank you.
All right, the next item on the agenda are miscellaneous updates from me. I can tell you that the Food System Resiliency Council continues to meet with regularity of the full council, as well as 3 subcommittees, of which I serve on 2. One of the subcommittee meets almost every other week. So in calendar 22, I participated in 44 meetings of the full council or its subcommittees. Last year, not quite that many meetings, but it has been quite a lot of time. But I think it's gotten into a more regular pattern, and hopefully will not be quite as time intensive for me. And by the way, the council is now fully under the Maryland Department of Emergency Management. That was a recent change in law. The Farms and Food Access for Resilient Maryland Foundation is up and running. You all will recall that we used to own it and lease out basically to the Southern Maryland Ag Development Commission, Tri-County Council of Southern Maryland, the Maryland Market Money Program. I was directed to form a new nonprofit to handle the fundraising and fiscal agency for the Maryland Market Money Program. For technical reasons, a private nonprofit was not able to serve as the fiscal agent for the Maryland Market Money Program under the Tri-County Council of Southern Maryland. They needed a statewide governmental fiscal agent. So MDA has very kindly agreed to take that function on as of July 1. So MDA is sitting in the role formerly played by MARBIDCO relative to SMATIC's running of the Maryland Market Money Program. But the other reason we wanted to create a nonprofit was there's potentially philanthropic and some USDA funding that was not being able to be accessed, that could only be accessed by a 501c3 nonprofit. So FARMD is up and running. I was the initial board chair. I have stepped down in that role. We've hired an excellent chief administrative officer in Vanessa Finney, who some of you may know in her role with the Maryland Nursery Greenhouse Landscape Association. We've just brought on 2 new members from the food insecurity community, Maryland Hunger Solutions, and the Anne Arundel County Food Policy Coordinator. So the board is working and it's launched. MDA is reviewing how it wants to proceed going forward in the future. There could very well be legislation relating to a grant program called the Farms and Families Grant that right now Farm is handling that, or is expected to handle that grant funding on behalf of SMATIC and the Maryland Market Money Program. So a lot of work, 100 hours for me in just the last 4 months in that program. But I think Farm has been launched. Also wanted to tell you, I've recently become involved in a legislative work group working on legislation related to property tax assessment for value-added processing facilities. It's been quite a controversial issue. Legislation has been proposed the last 2 years that has not passed because of concerns and objections raised by both local governments, the Maryland Association of Counties and the Maryland Municipal League, as well as by the Department of Assessments and Taxation. There was a very productive work group meeting held earlier this week. I was asked to come in by the lead lobbyist for the value-added ag groups, mostly because of my experience working with local government, but also the role that we play here. We obviously have loans with some value-added ag enterprises where we might have some concerns about an adverse property tax assessment. But I thought the meeting went very well. All the parties, there's sort of three main groups of parties. The agricultural community, which is now led by MDA, and Rachel Jones, the legislative officer at MDA, done a magnificent job on this. So that's one major party. The local governments, second major party, and then the third major party is the Department of Assessments and Taxation. So I felt good coming out of that meeting earlier this week. We've been busy. All the ag and farm groups have their annual meetings, annual conferences. Charlotte just had a very successful rural summit. We're going to be at Farm Bureau next week, Mako next week, and University of Maryland Eastern Shore is having a value-added agritourism conference next week or week following. So, and AC, you've been involved as well. Baron, you might have been involved in that as well. That you haven't asked about. So busy time in terms of staff out at meetings with exhibits and whatnot. So, and you all have received the marketing outreach report and the communication received from me or from Jill yesterday. So those are miscellaneous updates from me. Happy to take any questions about anything you want to know more about that we're involved with here. Hearing none, I want to tell you that, as is our custom, unless somebody objects, we're going to try to schedule the next meeting of this board right around February 1st, give or take a week, because that would put us in the best position to know what the governor's budget looks like prior to our budget hearings in the House and Senate. That's usually why we slot the meeting right around February 1st. And of course, we'll be holding our annual meeting during that meeting as well. So look for a doodle poll right after New Year's. We could do it beforehand, but I know a lot of schedules are very fluid until after the holidays. So we will send out a doodle poll first week in January. So with that, Madam Chair, we're right up to the place where any member can raise any issue or make an announcement before we go into closed session.
No more
Anybody have
questions or
anything?
comments? Okay. Do
Well,
we have?
I was going to say we're 2 minutes ahead of schedule.
Are we ready to?
AC has his hand up.
Okay, I was saying, I thought I was hearing someone. Go ahead.
I'm sorry. Hey, I just had a quick question. I had to take off for a second, and I didn't know, or I guess someone to contact me about this grant committee I'm on, correct?
Yes, absolutely. Yep.
All right. I'll wait to hear from the committee.
Yep.
Thank you.
Sierra is actually now the lead on that committee, so she'll be in touch with you.
Okay, not to worry. If you volunteer, we'll make sure that you're feeling welcome. Is there a motion to move into closed session?
I move.
So
I can.
Oh, I'm sorry, Charlotte. Being
it's all
new guy,
you.
I'll move that we move into closed session.
Yeah, and I think Charlotte wants to add to your motion.
I move to consider matters that concern proposals for a business or industrial organization to locate, expand, or remain in the state. B, to consider the investment of public funds. C, to consult with staff, consultants, and other individuals about pending or potential litigation. And to adjourn the meeting thereafter.
Oh, I agree. Thank you.
I second it.
Thank you, Sarah. Any discussion? All right, we'll go ahead then and vote. All those in favor of moving to closed session, say aye.
Aye.
Thank you. Opposed? I think that motion carries. So we will ask the powers that be